Good morning, ladies and gentlemen, distinguished guests, and of course, our chief host, Innocent, the CEO at High People, other CEOs present, the investment community, development partners, the media fraternity, ladies and gentlemen, all protocol observed. It's a privilege for me to deliver a few thoughts with you this morning as we celebrate 10 years of the Digital Impact Awards and financial inclusion in Uganda. So let me begin by thanking High People, our hosts and the organizers of this annual forum, which is now in its 10th edition. Forums such as this are very good avenues through which knowledge is shared, topical matters are debated, and conversations are held to shape policy choices and inform policy decisions. So I'm honored to be part of this event, and I would like to thank High People for being part of Uganda's financial inclusion journey for the past decade or so. Now, digital transformation has accelerated, especially in the past maybe 5-10 years, and I think this impact is most visible or has been most visible since the breakup of the COVID pandemic. And we have seen a lot of this in the payment space, which is at the forefront of the digital revolution in the delivery of financial services. According to the World Bank, during the COVID pandemic, 20% of the adults living in the developing economies, excluding China, they made merchant payments using cards, mobile phones, and the internet. And more than 40% of those did so for the first time. Now, that's during the COVID pandemic. And indeed, amidst the gloom of these movement restrictions, which were instilled by governments all over the world, the digital innovations picked up. And Uganda is no exception. Today, what was traditionally a preserve of banks has evolved into unconventional business models that are leveraging technology to improve customer convenience, transaction efficiency, lowering the cost of financial services, and extending financial inclusion. Now, key among the drivers for these revolutions are the developments associated with the fourth industrial revolution, the big data analytics, the Internet of Things, artificial intelligence, cloud computing, blockchain technology, the robotics, and all sorts of things. These innovations have been key drivers for what we see in the digital and payment-related innovations. Now, similarly, there have been some global changes in the demographics. The consumption patterns have changed. The population structures have changed with a heavy bias towards the young and the youth. In countries such as Japan, you might have read there is real worry, in terms of support to economic activity as the population is aging. So these demographics are key factors which have, of course, combined with the technological revolution, underpinned the payments innovations that we see today. And this is very particularly seen in digital money in its various forms, mobile money, cryptocurrencies, and of course, the latest kid on the block is central bank digital currency, among others. Now, whereas the payments innovation has moved very fast, interoperability of these innovations in some jurisdictions like ours remains a dream. The interoperability, especially with the conventional banking system, remains sluggish, owing to infrastructure limitations, policy, and legal constraints in some aspects. We cannot therefore talk about the path forward without reflecting on where we have come from. As you all know, the theme of my speech is the path forward charting Uganda's journey towards the national payment switch. We can't talk about the future without reflecting on where we've come from. And that's why I began by highlighting the key innovations that we have seen and what seem to be the main drivers. But if we were to reflect upon Uganda's journey, prior to 2003, the banking sector comprised of only banks. And the enactment of the Microfinance Deposit Taking Institutions Act in 2003 opened up that space to include MDIs. And then later on in 2004, the Financial Institutions Act was amended to strengthen the supervisory framework for the banks, but also to support product innovations in typical banking. In 2009, mobile money emerged as an alternative funds transfer platform. Of course, at the time, the main funds transfer platform was the conventional bank transfers, plus, of course, the international money transfers. But mobile money emerged as an innovation, creating an alternative that was very close to the ordinary citizen. Whereas there was no direct regulatory framework under which this innovation could be classified and overseen by the regulators, the central bank came up with an innovative and indirect regulatory model. The mobile money operators, which were telecos at the time, were required to work in partnership with the banks, and the approval would be granted to the partner bank, while the teleco was overseen by the communications regulator. So technically, the mobile money operator entirely relied on the telecom company to deliver the mobile money service. There must have been underlying commercial arrangements, but I'm sure you can imagine what the negotiations were like at the time. I do have my innovation, which is mobile money, but I'm required to go approach a bank, sell them the idea, and then the bank presents that product to the regulator for approval. Clearly, there were challenges. Now, since commencement 14 years ago in 2009, mobile money has grown significantly, and in the year ending June this year, statistics indicate that more than 190 trillion shillings was transacted through mobile money. And similarly, the volumes have gone up. On the value, the 191 trillion reflects a 22% increment compared to the same period in 2020. The volumes are equally up 21% compared to the same period in 2022. But what I wanted to focus on is that approximately between 6 and 10% of that value and volume relates to interoperability transfers. Okay? Of the 191 trillion, about 6 to 10% relates to interoperability transfers in form of bank to wallet, wallet to bank, and the cross-provider P2P transfers, particularly between the big two, MTN and Airtel. In 2005, following the changes I highlighted in the financial institutions regulatory framework, InterSwitch East Africa emerged. At the time, it was called Bancom. It came up with another innovation to support interoperability across the ATMs. And they continue to offer the service, but with a certain degree of success, which we think can be better. And as of June this year, I think there were about 24 institutions signed up to that platform. Why am I talking about this? I'm talking about this because of the big question of interoperability. And I would like to reflect on that journey. Of course, there have been several other amendments to the law. We saw the Tier 4 Microfinance Institutions Act coming in play in 2016 to regularize the operations of money lenders and also to provide for the licensing of SACCOs. These institutions have added to the array of financial services providers and players in the digital space. Digital lending, for example, is one of the fastest growing use cases in the mobile money field. And this has been enabled partly by that law. Now, in 2016, the central bank also amended the agent banking regulations, or rather issued the agent banking regulations to permit agent banking. But at the time, the sector also formed the agent banking company, again, to support the question of interoperability of the agent banking model. As we speak today, the agent banking model is one of the forums that have significantly supported access to financial services, banking services to be specific, by extending these services to the rural communities that don't have conventional brick and mortar branches. And the numbers are very exciting. In the year ending June, the agent banking platform posted a 28% growth, transacting 12.5 trillion shillings, up from 9.7 in the previous year. So, agent banking, mobile money interoperability, ATM switching are all indicators of the interoperability question that our sector continues to face, despite very promising developments in digital inclusion and digital innovation. So it remains a challenge and therefore adversely affects digital innovation and digital adoption. As you may recall, MTN and Airtel a few years ago had agent exclusivity. You listened to the earlier panel discussion. 10 years ago, maybe more than 10, at the start of this whole mobile money business, Airtel and MTN could not share agents. In fact, it was prohibited for an agent to offer services to a competitor. Okay? Interoperability, yet again. Okay? Now, there have been several other facets around interoperability beyond what I've highlighted. And a case in point are the bank-to-wallet transactions, which require the banks to have bilateral arrangements with each of the e-money issuers. In the market today, we have 25 banks. We have, I think, about 4 credit institutions. We have about 4 or 5 microfinance deposit-taking institutions. So if every e-money issuer or every mobile money operator is to serve each of those banks, it means that we shall have 25 banks times 25 e-money issuers. Okay. Currently, we have 27 licensed payment service providers, of which 2 are banks. So if you take the 25, it means each of those 25 must have 25 agreements with every financial institution to support bank-to-wallet and wallet-to-bank transfers. Interoperability problem. And of course, that means higher costs of running business. That means higher administrative costs. It means more, difficult commercial decisions when it comes to commission sharing. But it also breeds inefficiency. Okay? It breeds inefficiency in addition to impacting pricing. And ultimately, this will affect the usage of financial services. It will affect adoption of financial services. It will adversely affect financial inclusion. But it also affects innovation. Okay, forget the pricing, forget the adoption. It could also impact innovation, as some of the established players may use their market dominance to frustrate new entrants. So it is against this background that Bank of Uganda commenced work on the national payment switch. And suffice to mention that this initiative was also triggered by the National Payment Systems Act, which was gazetted in September 2020. The law gave the central bank a very clear mandate when it comes to payment systems. And as part of the implementation initiatives for the Act, the central bank decided to roll out the national payment switch Last year, the bank held extensive consultations with the stakeholders. We held several workshops, which were used to inform the business and technical requirements for this key piece of infrastructure, which we expect to significantly revolutionize the digital financial services in Uganda. In June this year, a call for expression of interest was issued, and interested bidders were requested to submit their expressions of interest to the central bank. This was done, and the bid evaluation process is undergoing. So I will keep that at that because of the sensitive nature of that process. But that is where the process is. Bid evaluation is ongoing. But in parallel, Bank of Uganda has also set up technical working groups which will discuss the other sides or the other facets of this initiative. As the infrastructure matters are being rolled out, we've set up working groups that are going to consider issues such as the governance of the switch, issues around the scheme rules, dispute resolution, issues around the fees, the interchange, and related aspects. Those are going to be discussed through a participative approach with the stakeholders in this space. And we look forward to the participation of the stakeholders, including you who are here in your different capacities. So overall, we expect that the national switch will promote efficiency, interoperability in payments processing, improve liquidity management, and the related pre-funding arrangements which underlie the bilateral contracts I spoke about a short while ago. We also think that it will support the standardization of cybersecurity monitoring and AML aspects across the sector, and ultimately lead to lower transaction costs, which remain one of the biggest barriers to the adoption of digital financial services, especially by the bottom of the pyramid financial services consumers. So we envisage that the national switch will be delivered as a safe and affordable public good that supports innovation. Now, as noted by the World Economic Forum, the digital revolution presents an opportunity for us all, including leaders, policymakers, the business community, and all citizens of Uganda and the world as a whole, to harness these converging technologies to create an all-inclusive digital economy. And I think this is where financial inclusion comes in. As we talk about digital innovation, let's talk about digital innovation that supports all. Let's think about a digital economy that is all-inclusive. Let's talk about a digitally inclusive economy. And that is, I think, the crust of the summit. So digital transformation has been proven to have a positive impact on financial inclusion by providing an avenue for the disadvantaged to access financial services and to participate in the money economy. In a 2020 digital payments report, the Boston Consulting Group noted that digitization is expected to continue to be a key driver for consumption and economic growth in the coming years. And the IMF adds to that by noting that increasing access to financial services can contribute to economic development and enhance financial resilience to shocks. We all saw what happened to the masses during the COVID pandemic. Okay? Some segments in society were really, really badly hit, partly because of limited financial resilience. And you cannot talk about financial resilience of a household without them being financially included. So there is a very clear relationship between digital innovation and financial inclusion. And that has been indicated in different research studies. According to the World Bank Findex report 2021, the share of adults making or receiving digital payments in developing economies grew from 35% in 2014 to about 57% in 2021. And 34% of the adults used a mobile phone or internet to make bill payments. The report further notes that financial inclusion in Uganda is estimated at about 66%, and this is above the sub-Saharan average of about 24%. But the key thing to note is that one of the biggest drivers for that is the mobile phone. So the mobile money accounts have been a key enabler for access to financial inclusion, and they are a key driver for the 66% reported in the World Bank Global Findex report. It is not surprising, therefore, that several countries across the world, especially in Asia, Middle East, and Africa, there is continued prioritization of digital transformation, and Uganda is no exception. The National Development Plan talks about promotion of science and technology, promotion of innovation and ICT as key strategic interventions. Similarly, implementation of digital infrastructure is among the priorities laid out in the recently launched National Digital Transformation Roadmap. So the ongoing initiatives by the central bank, such as the national switch that I've talked about, are key interventions that aim to directly support Uganda's national aspirations. We do not expect it to be an entirely smooth journey, however, but we are ready to implement these and related initiatives that support financial inclusion. And this is where the central bank is also, this is why the central bank is also placing a lot of effort on some of the other constraints towards an all-inclusive digital economy. And I'm happy that similar observations were made in the first panel discussion. Digital literacy is a challenge, okay? Digital literacy is a big challenge, and it's partly because of this that we continue to see the exploitation of our population through digital fraud and cyber-related incidents. So we are working around the clock as a central bank, together with our partners and different stakeholders, to increase the digital literacy levels in addition to basic financial literacy. And so we call upon the stakeholders in forums such as the one we're having today to openly discuss these constraints and propose feasible policy interventions. Bank of Uganda and the Ministry of Finance, together with Financial Sector Deepening, have just finalized the second National Financial Inclusion Strategy, which will guide the national priorities in the coming 5 years. And drawing from the lessons of the first strategy, this second National Financial Inclusion Strategy aims to deliver 5 objectives. The first one is to reduce financial exclusion and access barriers to formal financial services. The second one is to deepen and broaden the usage of quality and affordable formal financial products. Thirdly, to strengthen financial consumer protection and financial literacy. Fourthly, to develop an inclusive green finance market. And lastly, to promote gender-inclusive finance. Those priorities are built on 3 key pillars: public and private sector commitment and coordination, policy matters and legal and regulatory aspects, as well as enhancing infrastructure capacity and security. Again, infrastructure is key, just like we've seen when I spoke about the national switch. Now, relatedly, the central bank is also implementing the e-payment strategy whose strategic priorities are four. One, promoting infrastructure development and interoperability. Two, strengthen collaboration with stakeholders in the private sector as well as government stakeholders. And under this, Bank of Uganda continues to work with sister agencies such as the Uganda Communications Commission, the National Information Technology Authority, NIRA, the Insurance Regulatory Authority, among others, on infrastructure and policy-related interventions. For example, Bank of Uganda continues to support the financial sector, licensed institutions to be specific, with digital ID verification through liaison with NIRA. And digital identification has been credited as a key enabler for digital financial services. And I'm sure that's something that will be part of your discussions today. The third priority is on the legal and regulatory framework, which is underpinned by the National Payment Systems Act. And under this, I would like to mention that Bank of Uganda recently issued consumer protection regulations for digital financial services as part of the effort to empower the consumers. You've heard the discussions around digital literacy, the discussions around consumer empowerment. So the central bank recently issued consumer protection regulations, and we expect that these will support the addressing of those challenges. But we're also working on fair competition regulations, again, in support of digital innovation. We believe that for innovation to thrive in this market, we need to have a fair playing field. And so Bank of Uganda is working with relevant government authorities on fair competition regulations in the payment space. And these draft regulations will be coming out to the market for stakeholder comments at an appropriate time. The last aspect is around fostering innovation and competition, as well as consumer protection. And under this, the central bank reminds you all that we have a sandbox arrangement which can be exploited to test eligible innovations in a live environment, but under regulatory oversight. We've so far had maybe about 4 institutions running through the sandbox, a successful test, 2 successful tests actually, and 2 ongoing tests, 1 unsuccessful test, and the lessons are helping the innovators to improve their value propositions. So it is our sincere hope, ladies and gentlemen, that the ongoing interventions in the payment space and financial sector as a whole will promote not only financial stability, but also socio-economic transformation and realization of Uganda's Vision 2040, which is a transformed Ugandan society from a peasant to a modern, prosperous country. As I wind up, ladies and gentlemen, let me note that today's digital space is highly dynamic, with innovations emerging at an unprecedented pace. This, together with the changing social fabric and the demographics, the cultures, consumer behaviors, and other factors, it presents massive opportunities, but threats as well. We must therefore strive to find the right balance between the pursuit of value through digital transformation and the management of the attendant risks. This is partly what the National Switch aims to broadly achieve. For the digital transformation initiatives to be impactful, they must be inclusive, outcome-oriented, and they must be cognizant of the changing threat landscape, particularly with regard to cybersecurity, personal data protection, and consumer empowerment. The Bank of Uganda shall continue to provide policy and regulatory guidance, while at the same time playing the catalytic role for the growth of and development of a safe and efficient national payment system that supports financial inclusion. Finally, ladies and gentlemen, Let me once again thank the organizers of this annual Digital and Financial Inclusion Summit, Mr. Kawere, Innocent, and your team. Thank you, because this summit has over the years turned into a highly anticipated forum for financial inclusion and digital transformation policy conversations. So well done to you, Innocent, and your team. Allow me to leave you with a quote attributed to one Robert Louis Stevenson. He says, "Don't judge each day by the harvest you reap, but by the seeds that you plant." I believe that High People has planted lots of seeds, and they continue to plant certain seeds. So don't judge each day by the harvest you reap, but by the seeds that you plant.